Good morning and early afternoon. Welcome, welcome. Thanks for joining us for a session on extensions. This session is set up to be Q&A, so if you've got questions, there will be plenty of time and opportunity to address them. Where is everybody calling from? I'm in San Francisco. Feel free to start some chatter in the chat. This is a friendly space. We're going to talk about taxes, but we can still have a good time. Georgia, Vegas, Montana, welcome. I normally ask people what they're having for lunch or breakfast, but I heard something the other day that I'm intrigued by. I watch a lot of cooking shows. Do beans belong in chili? And I think this varies based on where you live. Beans in chili. This is not related to tax because there's going to be plenty of that later. Yes to beans. Beans do belong. Where do beans not, like, in what part of the country do beans not belong in chili? I'm so curious. What is the chili made of then? Okay, so Texas, no beans in chili. Got it. I'm intrigued. There's just like a bean smorgasbord in every chili that I've ever had. Well, welcome. We're talking about beans and we're talking about taxes. So it's going to be a good time. So you are joining today because maybe extensions have been top of mind. Maybe you filed one, maybe you haven't, maybe you've been nervous too. So in this session, we're gonna myth bust what extensions are. Good morning, Brian from Florida. Robert from Tacoma, welcome, welcome. We were talking about whether or not beans belong in chili. And I learned something today. In Texas, they don't. Well, thank you for joining. We're going to get started. We've got a small but mighty group here in attendance. We've got the webinar chat going. Feel free to put some commentary, keep it fun, keep it light. But if you've got questions that you want answered, there's going to be dedicated time at the end for a live Q&A session. So we do ask that you put your questions in the Q&A box in Zoom. That way we don't miss them. But we are going to get started. Let's go. So tax extensions debunked, what they are and why they're not a bad thing. Real quick about Collective, if you haven't heard of us or it's been very high level, we're a platform that's specific to supporting self-employed solopreneurs, specifically those who want to elect S Corp status and potentially save on their tax bill. Our service is an all-in-one platform. It includes bookkeeping, payroll, business tax filing, just to make being a solopreneur a little bit easier. And we're going to dive in. So what are we talking about today? What is a tax extension and what it really does? Why filing one is not really a bad thing? And some key deadlines and what the deadlines actually extend. And then we'll pivot over to the Q&A. So if questions come up throughout, just drop them in the Q&A feature and we will make sure we get you answers. Real quick disclaimer, this webinar is for educational purposes only. Nothing contained in this or in any related webinar should be viewed as legal or tax advice. Always consider consulting a professional if you need legal and tax advice in operating your freelance business. Okay, so what a tax extension really does. An extension kind of happens in two places, at the federal level with the IRS and perhaps at your state level. Every state's different, so just keep in mind that we're focusing on the IRS federal deadlines. But an extension is a formal request made to the IRS or a tax authority to extend the filing deadline of your tax returns. Typically, the extensions for the IRS, it's a 6-month extension. Some states may vary, but most of them piggyback or follow the IRS guidelines. So what actually gets extended when you file an extension? It extends for both business and individual the filing deadline. So everybody's aware of this April 15th. That's the big, tax day for all of us individual taxpayers in the US. And an extension gives you an additional 6 months. So if you file an extension on or before that April 15th, you now have until October 15th to file your tax return for the previous year. So what gets extended when you file an extension? The filing deadline. What doesn't get extended? The deadline to make your tax payment is still due on the original deadline. So while you file an extension, you still need to make a payment on what you think might be due with your tax return. So payments are not extended. Other filings like estimated tax deadlines, those have their own schedule of when they're due. Payroll tax deposits, if you are on payroll for yourself as an S Corp or you have a team of employees, payroll tax deposits, those continue on their normal schedule. And then this is the big one. If you do not, or if you do have a balance due or you expect to owe, you're going to start accruing interest from that original filing deadline. So it does not extend or reduce the risk of underpayment interest. Interest will still accrue from that original, April 15th deadline. Little segue into extension payments. So extensions give you more time to file, but not more time to pay. So if you filed an extension before, you might have heard your accountant or maybe H&R Block recommended you might owe some money with your tax return. Here's your extension payment. This is because your extension payment deadline does not get extended with your filing deadline. So you want to pay in an amount that you think you owe or that you'll expect to owe by that original filing deadline. Paying this in now can stop underpayment penalties from being accrued. So let's say you think you're going to owe $2,500 when you file your tax return, but you're going on vacation close to April 15th. So you file an extension. If you make that $2,500 payment with your extension, so an extension payment, and then you come back from vacation, you finalize your tax return in June, then you don't owe anything. And there's no additional penalties or interest because you've covered your tax liability by the extended or the original deadline. And I'm keeping an eye out for questions. Again, if something comes up, it doesn't exactly have to be related to extensions, but that's what we're talking about today. Feel free to put questions in the Q&A box. So why filing an extension is normal? There could be a lot of stigma or uncertainty around extensions, but it's actually a very useful strategy depending on your situation. So this looks a little bit wordy. You're going to get a copy of this recording so you can skim through and look at this in more detail. But why are extensions a good thing? It can give you more opportunity for strategic planning. So in most instances, filing an extension can give you an opportunity to extend the time to fund a retirement plan. So if you're, using a SEP or a solo 401k, certain portions of those contributions the time you get to contribute to them can extend when you file your extension. If you have multiple business ventures and you're waiting on K1s from different businesses or you're waiting on 1099s, sometimes people you wait on don't follow the tax deadline. So it means you're late with the tax deadline. So proactively filing an extension can give you more time to wait on certain documents. Complex tax situations. So maybe you gained a business partner in the middle of the year, or maybe one left. Maybe you bought a big piece of equipment and you're not sure how to put it on the books. Filing an extension can give you more time to work out those complex situations. Stress reduction, maybe the nature of your business. You're in peak season in March and April, and you just don't want to think about filing your tax return. You can file an extension for that. Safety net, again, for those folks who maybe vacation in March or April. You don't have to have a specific reason for filing an extension. Maybe you just want more time. Maybe you don't want to think about it while your kids are on spring break. So you can file an extension to give you more time to finalize the details of your return. Some common misconceptions. You are a higher audit risk, which is not necessarily true. I was in public accounting for a number of years, and I've got my share of PTSD from that experience, but we filed extensions. Extension season was huge for our clients with pass-through businesses. A lot of times you're just waiting for more information or other businesses to file. So it doesn't necessarily increase the risk of audit. Common misconception, you have more time to pay your tax bill. Not necessarily. The IRS does want you to pay in what you expect to owe. If you don't have the time to do an extension calculation or payment, make a good faith safe harbor estimate. If you owe a little bit at the end, the risk of underpayment penalties may be minimized if you've done quarterly estimates, but you do not get an extension for paying your tax bill. It's simply for more time to finalize the actual filing. Common misconception that extensions are hard or complicated. They're not. They're actually a one-page simple form that you can e-file with the IRS. The most complex would be if you live in a state that does not follow the federal extension. So I'm in California. So if I file an extension, California rules state that it'll piggyback off of the federal extension, meaning I don't necessarily have to file anything with California. But there are some states, I'm not sure if this is, New York has a lot of standalone state filings. So if you're in another state, you may have to separately file like a one-pager state level extension. So that's something to consider, but they're simple. I think you can do it for free with the IRS on their website. You need a valid reason. We debunked this in the advantages. No, you don't. As long as you're aware of what it actually extends, the filing deadline, not the payment deadline, the IRS doesn't ask for a reason, so it can be for anything. And it does not mean that you've done a bad job as a business owner. It just means that life is happening and maybe you just want more time. So extensions are not indicative of, being disorganized or being a poor planner. There are outside factors that need to be considered. Maybe your bookkeeper got sick and your books aren't ready. Maybe you just don't feel like it in April. The IRS doesn't care. Just file your extension by the original deadline, make any necessary extension payments, and you're good to go. Deadlines, payments, and what to know if you extend. And real quick, there's some questions in the chat, Casey, just so that I don't miss them, if you don't mind copying and pasting them into the Q&A box, and we will make sure we address those. So this last section, this is the last slide, and then we're going to pivot over to Q&A. And there's not a lot of chatter in there, so I do encourage you to put some questions in. Maybe it's related to general small business questions. Maybe it's specific to extensions, but this time is for Q&A, so feel free to use that feature. So deadlines, payments, and what you need to know if you extend. So this isn't an exhaustive list of all business types. We're really focusing on, small business profiles. So if you've got a pass-through business like an S Corp, or you're a sole proprietor and your business activities filed on your individual return, these are the deadlines that are going to be important for you to understand if you file an extension. So a key to staying compliant, understanding what your deadlines are. So March 15th, it's the first major filing deadline of the year. It's when pass-through business returns are due. So if you've got an S Corp or a partnership tax return, you need to either file that return or extend it by March 15th. Pass-through businesses, what it means is that you as the owner, multiple owners, are the ultimate taxpayer. So there's typically not a balance due at the federal level for an extension payment, but some states have a state level S Corp or partnership fee or tax. So if you file an extension for your business, just note that your state may have a payment associated, even though it's a pass-through business. The next big deadline, we all know this one, April 15th is the deadline to either file or extend your individual tax return. So if you are a sole proprietor or single member LLC, you put your business activity on Schedule C. That's included in your personal return. And if you need more time for any reason, you can either file or extend along with an extension payment if needed by April 15th. Then we mentioned, okay, so this extension grants a 6 month, an additional 6 months to file. So from March 15th, for business returns, you have an extended deadline of September 15th. So if your return was extended, you have until September 15th to file. So you can file anytime between March and September. Note that if you do not file an extension proactively, and you file late filing penalties, even if you file before September 15th, late filing penalties may apply. So you need to file that extension to reduce the risk of penalties being applied to your return. Otherwise, it's just considered late. So it is a proactive motion to consider whether or not you need more time and file that extension. And then 6 months from April 15th, October 15th is the last call to file your personal tax return. So similarly, you need to proactively file the extension by April 15th so that late filing penalties don't apply if you file after April 15th. And then just to remind, extensions only extend your filing deadline, not the deadline to pay. And then always note, does your state follow the federal rules? Are there standalone, separate filings required for your state level extension? And we've got a relatively quiet group, but today we're going to we need some feedback. So we've got a quick poll. We know these are short slides, but we want to understand what's valuable, what's important. And we'll leave this up for a minute. And then we're going to move on to Q&A, where I see a couple questions. Holly's in the Q&A, and Casey, Brian, I see some commentary in the chat. We will pivot over once we close out this poll, and really, really appreciate your feedback. So before we start the Q&A, if you are interested in speaking with a representative at Collective about whether or not an S Corp is a good fit for you, you can scan this QR code. It's going to take you to our booking page. There's also a link in the chat. It will link to the calendars for our business advisors. They can answer generic S Corp questions, expand more on extensions if you need to. Of course, you can use the time here. So we'll leave this up for a second, and we will give you an opportunity to save this link. Promo code Sun Savings, the last sips of summer, $200 off at checkout. And we'll leave this. Brian, I believe that may be how the poll works. It may disappear once you've answered, but we'll find out. Thank you. Tiz is asking, I'm a small business owner. Do I still have time to file an extension? I will answer that question shortly once we pivot over to the Q&A. So I'm going to stop sharing my screen. And I'm going to pull up the chat and the Q&A. And if you've got a question that's not in the Q&A, there's a chance I miss it. But we've got a small group. We'll check both. So let's get started. Holly's asking, if you miss filing by the extended deadline, say September 15th, what happens? You want to file as soon as possible, as close to the filing deadline as you can. You want to file as soon as possible. What may happen is you could start incurring late filing penalties. So September 15th, you're referring to a business deadline. So the way the penalties work differ based on business level versus individual. If you miss the filing deadline, the extended filing deadline, I can't remember off the top of my head, but it's maybe $250 penalty per shareholder, so per K1 of a pass-through business per unfiled month. There could be some nuance or asterisks on those exact metrics, but it's something similar to that. So if you miss the extended deadline, best advice is file as soon as possible, but late filing penalties can start to accrue. Anonymous attendee, do S Corps have to fund SEP IRA before filing? So certain retirement plans, and I'm a little bit rusty on the nuance of, SEP versus 401k, depends on who's contributing. But generally, extending your business tax return can give you more time to contribute to or fund a retirement plan. So for instance, I know this for certain, let's say you have a solo 401k out of your S Corp. You fund it in two portions. One portion is the employee portion, where you, as the S Corp owner employee, can do an employee contribution. The IRS sets the max. That employee portion is always due at the end of the calendar year. So 12/31, your employee contribution is due. The employer contribution, so what your S Corp can match or contribute on your behalf, is due when the S Corp tax return is due. So if you don't file an extension, it's due March 15th. If you do file an extension, the employer portion of that contribution for the prior year is not due until that extended deadline. So filing an extension may grant you additional time to fund retirement plan and see the benefit as a deduction on that, I guess it would be 2024 tax return, that prior year tax return. Esther's asking, is the sole owner S Corp taxed as a pass-through and due to file 315? Yes. So if you're the sole owner of a business, let's say it's a single member LLC, and you elect the S Corp status, you trigger the S Corp tax return, which is a pass-through business subject to that March 15th deadline. So yes, you would file the S Corp tax return, the federal, it's Form 1120S. If you live in a state with a state level S Corp return, that would likely be due. And if you need more time, you'd file an extension by March 15th. Something to note, if you have a pass-through business, S Corp or partnership that's due on March 15th, typically, if you file a business extension, more often than not, you'll also file an individual extension. Depending on the circumstance, depending on how many parties you're waiting on, it's peak season, so accountants are, super bogged down. If you file an extension for your business, there's a 1 month window between March 15th and April 15th to finalize that business tax return and have the K-1s ready to include in your personal return due in April. So we often see that if a business extension is filed, there will also proactively be an individual extension filed, just as like a cover to make sure, if you're waiting on something for the K-1 or the business, you're kind of doing a CYA with the personal filing. Let's see, and I'm going to move over to the chat to see the additional questions, and we're going to go up. Casey, you don't have a higher risk for audit if you file an extension every year, or they don't keep track of excessive amounts of extensions. So what factors are happening when someone files an extension? There's a lot of moving parts. You could have multiple businesses that maybe they have different, fiscal years. That's probably unlikely for a pass-through business. But maybe you're an owner, an investment company, real estate investment, and it's managing a ton of properties, and you just get a K-1 from that business, and maybe they don't finish their books until June every year. These are common instances where people have to file an extension. So filing an extension every year repetitively is not indicative of anything bad happening on you as a taxpayer. It's actually making sure you can file a complete and accurate return, which is more advantageous. So no increased risk. Of course, you have to follow, the motions and the practices that the IRS has in place for filing an extension, like filing an extension by the original deadline. Even if you don't make an extension payment, the IRS is going to start, they will gladly add penalties and interest to your tax balance due. So as long as you're paying, filing the extensions by the deadlines, it's not an audit risk. It's not a red flag. Casey, you're also asking what states don't follow IRS extension of 6 months. I usually have a chart for this, and I don't have it with me handy, but there are a handful that, maybe have a 5-month extension, or it's an automatic extension, or it follows the federal, or it has its own state level form. So Casey, depending on where you live, you can do a quick Google search. Maybe that's something that Collective can put together as a resource. But it's a great question that I don't know the answer to off the top of my head. Brian, Florida does not have a state tax. However, if you have a corporation, you will need to file an extension for the state. Yes, so this is a great example of a nuance. In the states that don't have a state level income tax, but you do have a pass through business, maybe you trigger a business level filing at the state level that you're not used to having at the individual level because there's no individual level income tax. So, something to consider if you live in a state, Washington, Texas, Florida, Tennessee, that doesn't have a default state level income tax, there may be some nuance. Maybe that's a flag to consider. There may be some nuance in your extensions, standalone extensions, or business level extensions. Um, Tiz is asking, I live in Pennsylvania, but sometimes work in New Jersey, so I'm double taxed. Any advice? Not necessarily related to extensions, but that's okay. We're going to talk about residency a little bit. So you live in Pennsylvania. That's where you're the ultimate taxpayer. Um, it depends on what work means. Are you an employee? Are you self-employed? Do you physically travel to New Jersey? Or are your clients simply in New Jersey and you're performing the work remotely? What can happen super high level, depending on the nature of the work in New Jersey, you're going to want to consider what triggers a filing requirement in New Jersey, and every state's different. It could be the amount of sales that are sourced from New Jersey. It could be whether or not you physically go to New Jersey to work. Every state's different. But if you trigger a filing requirement in New Jersey, um, typically you allocate or source income to the various states if you have multi-state filing requirements or activity in multiple states. And so usually there's this concept, it's called apportionment, where you would apportion the income to the relative state. You will always pay state tax in Pennsylvania because that's where you're the ultimate taxpayer. But you may have not necessarily individual income tax due at the New Jersey level, but you may have some business level tax due for the amount of activity sourced there. Could be worth a deeper conversation, Tiz, but if you're not a resident of New Jersey, you wouldn't necessarily have the same weight of a tax bill that you do in Pennsylvania because you're a non-resident. Haneen's asking, is there a penalty for not reporting quarterly? May need more context there, but if you mean by reporting quarterly, like estimated tax payments, um, the whole idea for estimated tax payments is to prepay into your tax bill, kind of like mimicking withholdings through like a regular W-2 corporate job. When you don't pay in quarterly, then the IRS is not receiving any of your tax bill throughout the year, and they want to collect year round instead of in a lump sum. I don't remember the underpayment percentages, but if you miss a quarterly estimated tax payment, you can make it up at a later date. Typically, any payment is better than none, but you may start accruing underpayment penalties for not paying into your tax bill throughout the year. Let's see. And we're almost at time. There's not a whole lot of questions left, so we'll keep going. If you can hang on, I'll be here too. Casey's asking, I noticed when I got extensions in the past, I go to contribute to my SEP before October 15th. It got applied to the current year, not the previous year. I called the bank and they said there's no option to apply to the previous year. It just applies to the current year. Casey, it's going to depend on how you're structured for tax reporting. Again, I may need to brush up on the difference between SEP and solo 401k, but it could depend on who's considered contributing. Is it you as an individual versus the business as an employer? Tiz, you're a business owner. Do I still have time to file an extension? If it's for 2024, so last year, you would have had to file an extension by March 15th. So if you have not filed your 2024 return and did not file an extension, you'd want to file as soon as possible because that tax return would be considered late. Wonderful. Let's see. I think there's one more. Can you talk a little bit about suggestions for those of us sole prop LLC with or without S Corp election who have multiple part-time Schedule C types roles sources of income? Is there a good way? Is there a good approach, entity, and structure that is tax savvy? So somebody is asking, anonymous attendee, how do you manage multiple business types? So I guess I would ask, are they truly different business ventures? Like rideshare plus a marketing consultant plus a virtual assistant. Like if the business activity is vastly different, then you would truly have different Schedule Cs. Um, when you form an entity like an LLC, typically it's assigned to one specific business activity. And so, depending on how much activity is in each of those separate businesses, depending on how much activity, maybe it's one's profitable, one's not, maybe one's more hobby. I do this on the side. Maybe one is filler. You have no interest in growing it or continuing it. In those instances where they're small, there's not like a long term commitment to growth. Um, Maybe they're a hobby. Those would be okay to continue on Schedule C. You don't necessarily need an LLC for them. You can operate as a sole proprietor and they would get reported separately on Schedule Cs. In those cases, a bookkeeping tool is probably advantageous. You might have a separate bookkeeping account for each business activity so that you can easily populate those separate Schedule Cs. Even an Excel spreadsheet might do. Really, you want to identify which business activity has the opportunity for growth. And that's the one maybe you set up an LLC with S Corp for. You might hear about holding companies. Typically, and depending on the nature of the business or like the types of businesses involved, typically holding companies create more complexity than they generate tax savings opportunities because you're just creating a funnel that all your business activity flows through, and it still lands on your personal return. So, in terms of entity structure for various part time Schedule Cs, um, creating some kind of tiered, you know, multiple LLC structure may not be the best bet. And then even forming standalone LLCs may be more costly if they're part time or there's no growth goals in them. So your Schedule Cs, your standalone Schedule Cs might be the most appropriate, but maybe there's one of those businesses that there's opportunity or potential to, I guess, formalize with an LLC S Corp. I hope that answers some of your question, anonymous attendee. Thank you. That's a great question, and we see it a lot. Let's see, Esther, if you know you'll get a refund, is it not necessary to make quarterly payments? Yes. So if you're maybe in the instance that you're generating a loss for your business, and you know your tax bill is going to be low, and you've got a salary with high W-2 withholdings, no, you don't have to make quarterly estimated tax payments. You can choose to skip one. And maybe you assess it each quarter. Maybe Q1, Q2, you feel comfortable. Q3, something changes, and maybe you decide you want to submit a small payment. But if you've done a calculation and you feel comfort that there's no tax bill or anything outstanding because you've paid in already, or your tax bill will be zero, then you don't necessarily have to make a quarterly estimated tax payment. Great question. We appreciate this group. It was small but mighty today. Casey, is there a list of all the free webinars you offer? So yes, if you go to YouTube, all the historical webinars that we've hosted are there. They're free to watch. You'll see just exactly how we screen shared here. And then going forward, I might ask Sarah, who's helping me in the chat, if we've got a published calendar. But if you follow us on social media, LinkedIn, you will see invites for upcoming webinars, and we're talking about a lot more stuff. Next week, we're talking about estimated tax payments and safe harbor. So there is a list, and we will make sure that we can get that to you. But thank you. Thank you for the questions. It was a great group, great conversation. Learned some things about beans, and I hope you learned some things about extensions. We'll see you next time. Thanks, guys.